Hello everyone, in today's video I would like to talk about some tactics for cash and carry trade. Lately we see a lot of long liquidations, as you can see these weeks, so that means that some long position with margin was liquidated, and someone just bought the dip. So we have one dip, two dips, and this is third dip. So can we use these dips to in favor of us for cash and carry trades? So first of all, let's go to May 10th and let's check what happened on that day with the price of Polkadot. First of all, let's go to 15-minute graphic and let's find May 10th. Also, let's go to the future contract and find also May 10th. So as you can see, on May 10th we had some correction. Correction was around 16%, and let's check what about future market, and future market also was around 16.63%. So now let's think some tactics for cash and carry trade and how those liquidations we can make in favor for our trades. So let's check this graph and see what happened at that day. So first of all, we have two huge red candles with big bodies and long wicks. As you can see, first candle has similar body and the wick, and the second candle has the longer wick and smaller body. When the wick is longer and the body is smaller, it usually means that trend is reversing and the price should go up in this case. And the same happened on the future contract. Also had two red huge candles, with also first candle was 50-50 ratio body and the wick, and second candle had longer wick than the body. So in this case we can think some tactics how we can open cash and carry trade. So let's say we just waited till this candle will be closed and opens a new 15-minute candle. As you can see, the new 15-minute candle opened around $34.63, and in the future market this candle opened around $35.83. So in the future market it opened around this, and in the spot market 34.63. So we have $1.2 in the premium. So we can use this premium as our protection to open our cash and carry trade. So first of all, what we have to do, so let's say we just opened a new candle at $34.63, and we decided that we would like to open cash and carry trade. So we have bought on the spot market some Polkadot for $34.63. Instead of selling it instantly on the future market, we waited a bit. As I have told you before, we have around $1.2 protection. So when we have opened this trade around $34.63, if we would like to open some trade in the future market, so we had to open this trade around here. But as I told you before, instead of opening this trade instantly, we just waited, and as you can see, the price rose up, and after 1 hour it went to $37.97. So let's say that we have waited enough and we decided to make second part of cash and carry trade, and we decided to sell for 37.97, and we had our spot market. We have bought it in spot market for 34.63. So in this case, we have 10% of return. As if we have used regular tactics of cash and carry trade, we would have around around 3.5% of return. So as you can see, using this tactic, we can make almost 3 times bigger return. But of course, there is always a risk. So now let's look at another scenario. So let's say we have opened this trade, but the price started to going down. As we told you before, we have protection for $1.2. So that means that price can go $1.2 down and we can still be in the profit. So we have to start shorting this future contract over $34.69. Otherwise, we will be not profitable, and we will have some losses in when this contract will end. So of course, when you are willing to take a risk, there is usually bigger reward, but so every high risk tactics has its downside. This downside is that your money could be locked until the end of this contract, so you can close this trade break even or in a little profit. So let's see other dates when those wicks happened. So first of all, let's go to the spot market, and we have here 1 week on May 13th. So let's go to the future market and also open same graph, and this time we had around 14% correction, and same as here we had around 15% correction. So as you can see, again, the last 2 candles are really big, and it has really long wicks, and the last candle has really long wick to the downside and smaller wick to the upside, and really small body. This candle also means usually a reversal of the trend. So let's say that we have opened again a trend on spot market at $35.78. Let's mark this price on the future contract around here. So as the price was on the future contract around $36.23, that means that we had around $36.23 minus 35.08. We had around $1.15 of protection. So let's say that this time we decided to wait a bit longer, and the price was going up and up, and we decided to close this second part of the trade at $44.40. And if we take our spot market price, we can see that we could have around 20% of the profit. And if we would be done the regular cash and carry trade, again, we would get around 3% on trade of trade in the June future market. So like I told you before, on this trade, it is a bit riskier than a regular cash and carry trade. I do not recommend to do this trade with more than 10 or 20% of your bankroll, because if this trade will be not successful and you decided to enter the market at the wrong time, then the price will go down. You have any way to take a short position around 0% of gap, and you have to carry this trade almost over to the end of this contract, as the future price and the market price would be the same, or of course sometimes this gap is going to 0% and you can close it earlier. But as I told you before, I'm telling you now, if you are willing to take a higher risk, there is usually a higher reward. So as you can see on the June market, usually gap was now around 3%, but using these tactics and some risks, we can get around from 10% to 20% of profit. Also, if you're willing to trade in in OKEX or Huobi platforms, they have a weekly and bi-weekly contracts, so you can try to do this trade also there. And if you are unlucky, the good thing is that the contract will be closed after 1 week or after 2 weeks. So as in OKEX and Huobi weekly and bi-weekly contracts closes every Friday. If you have in mind, do not use all your bankroll. First of all, practice with small amount. But as you can see, if we have these long sell-offs and long wicks, maybe we can open 1, 2, 3 trades with 10-20% of our portfolio, and every time we have 10 or 20% of profit. So please let me know what you think about taking this risk in the comments below, and see you in the next videos.